So in this video, I want to talk about the differences between a mortgage pre-qualification and a mortgage pre-approval. Hey, what's going on, guys? Victor Chambers here, your New Jersey real estate agent specializing in Bloomfield, New Jersey in the greater Essex County area. I'm back with another video. If you're new here, welcome. If you've been here before, welcome back. On this channel, I upload videos that provide you with tips, strategies, and advice to empower you on your real estate journey. While you're here, like this video, subscribe to the channel, and hit that notification bell so you'll be notified when I upload brand new real estate content. So in this video, I want to talk about the differences between a mortgage pre-qualification and a mortgage pre-approval. Now, I'm no loan officer, but in my experience, people tend to try to use those two terms interchangeably, but they are not the same. So in this video, we're going to talk a little bit about the differences between the two. First, let's talk about the mortgage pre-qualification. So you're looking to purchase a home and you want to get a general sense of what price range you should be looking for and what you could potentially qualify for. This is where the mortgage pre-qualification comes in. The mortgage pre-qualification does just that. It gives you a general sense of what you could qualify or what you could be pre-approved for in terms of a home purchase. It's essentially an estimate based on information you provide to your loan officer. We're talking about income and credit scores. I like to think of it as kind of a back of a napkin estimate of about how much you can afford in a home and the general price range you should be searching in for a home. The pre-qualification also gives you the opportunity to learn more about the different options you may have as a borrower in terms of types of mortgages and types of mortgage products that are out there. With a mortgage pre-qualification, the lender is not verifying your income and not necessarily even running your credit and verifying your credit. They're essentially just taking your word for where your income is, what your credit is, plugging it into a system, and just getting, again, a general sense of what you could be pre-approved for. Some lenders will even provide you a pre-qualification document or letter that shows what you've been pre-qualified for, but again, this is not a pre-approval. A qualification letter typically may indicate that the lender has not verified your income or tax returns or your credit scores. A pre-qualification letter may also indicate that the letter does not constitute an official loan approval and that it does not commit the lender to rates, fees, and terms. Again, think of the pre-qualification as an indicator of about how much home you would be able to afford, and based on the information you've provided the lender, approximately the rate that you may be able to borrow at. So now that we've talked about the pre-qualification, let's talk about the pre-approval. The pre-approval requires a bit more work by you and the loan officer. You're actually submitting tax returns and pay stubs and bank statements. The lender is actually running and checking your credit. They're taking a loan application from you and they're submitting all of this information, perhaps through some sort of automated or preliminary underwriting system to generate a pre-approval. Now, in the mortgage pre-approval letter, the lender will indicate that they have taken an application from you, they've reviewed your tax returns, they've reviewed your pay stubs and bank statements, they've run and checked your credit, and they will indicate that they confidently believe that they can lend you money to purchase a home for a certain amount and with certain terms. The beauty of the mortgage pre-approval letter is that you can confidently submit offers on homes knowing that you will be able to borrow from that particular lender. So after obtaining the mortgage pre-approval, you're officially in a place where you can search and submit offers on homes. So as you can see, the two are not the same, and there is a difference between a mortgage pre-qualification and a mortgage pre-approval. Now, I highly recommend that if you plan to purchase a home in the next 3 to 6 months, you seriously consider getting pre-approved. Now, if it's something you're just thinking about and you're not necessarily ready to make a move, then getting a general sense or indication of how much home you can afford by getting a pre-qualification probably makes more sense. But if you're looking to purchase in the next 3 to 6 months, I would highly recommend you actually get in touch with the loan officer and go through the process of actually getting pre-approved. Trust me, as a real estate agent, I submit offers for clients all the time, and with those offers in the form of a contract of sale, I have to submit a letter of pre-approval to the listing agent and to the seller indicating that my client is qualified to purchase the home. So getting pre-approved is much more than just a formality. So look, I hope this video has helped you understand the difference between a mortgage pre-qualification and a mortgage pre-approval. Don't forget, again, to like this video, subscribe to the channel, and hit that notification bell so you'll be notified when I upload brand new real estate content. And I'll see you in the next video. you.